Let's talk to someone who has advised on many of the biggest corporate deals we've seen in recent years. He's Global Head of Advisory and Senior Managing Director at the world's largest buyout firm. That's Blackstone's John Studzinski. John, thank you so much for joining us.
Good morning.
You know, it's amazing in the last 2 weeks we've had a flurry really of M&A. I want to get your sense, is this because we're seeing values? Is it because actually a lot of companies are sitting on cash? Or is it because they're optimistic about the future? They think we're not going to see a double dip and we're going to grow.
You've got two different worlds right now. You've got the cash-rich corporate world where financing isn't an issue, so it's all about investment decision. Those people are doing deals for cash. A lot of that is in technology, consumer, and healthcare. And you see a lot of that centered around North America. The other world is the brick world. And it's fascinating. For the first time this year, for the first 9 months, you have over $100 billion of deals on outbound M&A from Brazil, Russia, India, and China. Extraordinary, for the first time.
And this is just going to set to continue. I mean, if I speak to you, in 2-3 months, how many more deals are going to come on the front line that you've probably known for, years, months?
Well, it's interesting. If you look at that number, 100 billion, it's principally concentrated around telecommunications, energy, power, and materials. China, very big component of outbound investment. Brazil, interesting, 50 billion of inbound investment this year, the highest ever, 2.5 times last year. What you see is these emerging companies now want to establish themselves on global platforms.
And this, despite the fact that we're seeing volatility and risk aversion on the markets. I mean, do they even care? If you're China, you have the cash, you want to, play globally. Are you looking at valuations? Are you saying maybe I should wait a couple of months? Or do you say, well, look, I have the cash, I want to be in that country, let's go for it?
Remember in business school you learned that there was the financing decision and the investing decision. Right now for the emerging markets, the issue is not financing. There's plenty of financing for these companies. The issue is the investment criteria. So they're being very careful about investment, but they're also being very strategic.
Strategic, I mean, you were talking about some of the industry groups. We saw basic resources as well.
You saw the Russian deal announced yesterday with the Russian-Egyptian link-up, a Russian telecom company establishing itself as a global player. You saw Bharti acquiring the Zain assets, another Indian company establishing itself as a global telecommunications player. You can see a lot more of that.
What does it mean for our companies in Western Europe or in the United States? I mean, are they feeling the jitters? Are they saying, actually, we're facing with these huge giants of powerhouses that have cash and that may be looking at buying some of our companies? Is that cash welcome?
I think the cash is welcome, but I think you have to remember that doing business in Asia and in Africa and the Mideast, there are lots of cross-cultural issues that people have to come to grips with, both in terms of governance and boards, and it's not just a question of cash.
John, you said that we would see quite a volatility in terms of the summer months. Do you expect that volatility to continue in the equity markets?
I think the volatility will continue. I think some people are still of the view that the equity market is overvalued. And I think
Are you of that view?
I am of that view, and I think you see that in the M&A world. People are buying businesses for cash because it's still a better investment than keeping cash or dividending cash back to shareholders.
What do you make of the fact, we saw it from the Bank of Japan, they are possibly looking at injecting more liquidity. We may get another global round of quantitative easing. It seems that the global economy may just bumping along thanks to all this cash injection. What happens when you get that cash injection out?
Well, I think M&A activity is going to, in some sectors, is going to continue, and that will continue to be very rigorous. The big shift now is to Asia, and I think, as you talked about Japan, you talked about China, there's a lot of Chinese money being reinvested, Korea and Japan. That's going to continue to be, I think, probably the most interesting area of activity for the foreseeable future.
What about European companies trying to get into Asia? I mean, if we don't go out there and buy some of the companies or kind of, form some strategic alliance, are we not going to be left out?
What Europe is doing is not buying. The Europeans are reestablishing how they're manufacturing and distributing through corporate joint venture and other vehicles. So we're working with a lot of clients, particularly in domestic China, who are restructuring deals that they did 10, 15 years ago, and they're looking at doing business in a different way in the new China.
John, do you follow football at all? I mean, we had this big deal today with Liverpool Football Club, and it seems that there's so many more Americans wanting to buy these probably prestigious, UK football
I think
clubs.
this is great. I've been a Boston Red Sox fan. I'm from Boston. I hope you know that. And so the fact that Liverpool is now affiliated the shareholder of the Boston Red Sox, I think that's fabulous. It's good for Liverpool because Boston Red Sox culture knows all about fans, it knows all about long-term loyalty, and it knows all about sport.
But will you be supporting Liverpool, or do you support Liverpool?
I live in Chelsea.
Enough said. John, thank you so much. Don Studzinski there. Well, that's it.